Hello, welcome. Today we are diving into the world of taxable income, specifically focusing on wages, salaries, and other earnings that you'll need to report on your income tax return. Let's start with the basics. Wages and salaries. These, along are with any other compensation from your employer, are part of your gross income. Your employer will provide you with a W-2 form by the end of January each year, detailing earnings and taxes withheld. If you're mailing your tax return, be sure to attach copy B of your W-2. If you receive a 1099-NEC instead of a W-2 because you're considered an independent contractor, you'll use Form 8919 to report any uncollected Social Security or Medicare taxes. Even if you're providing childcare services, whether as an employee or not, those payments are considered taxable. If you're self-employed, you'll report these on Schedule C. And remember, even babysitting for your relatives count. Also, U.S. citizens and residents need to report income earned from outside of the U.S. unless it's specifically exempt. This includes everything from wages to investment income. However, if you live abroad, you might qualify for the foreign earned income exclusion. If you receive advanced commissions, you'll need to include those in your income for the year that you receive them, even if you haven't earned them yet. For cost of living, allowances are generally taxable, but there are exceptions for certain federal employees stationed in Alaska, Hawaii, or even overseas. Back pay awarded in a settlement or judgment is considered taxable income. So are bonuses and awards from your employer. Severance pay is also taxable, even if a portion is used for outplacement services. Sick pay is generally taxable, whether it comes from your employer or another source like an insurance company, if your employer paid for the plan especially. Disability income usually follows similar rules, but there are some certain exceptions for different kind of reimbursements. Accident or health plans, coverage value not included in income, but benefits received may actually be taxable. Fringe benefits like a company car or gym membership can be taxable unless they're specifically excluded from the law. When it comes to group term life insurance, the cost of up to $50,000 of coverage is tax-free. Any amount above that is taxable, and it will be. When it comes to restricted property, if you receive property like a stock, then its fair market value is generally taxable. However, there are restrictions on the property like vesting periods. You may not have to report as income until those restrictions basically lapse. Stock options can also be complex. Non-statutory options are usually taxed when exercised or sold, while statutory options have different rules. Don't forget tip income. All these tips are taxable income, whether they're cash or non-cash. Keep a good record of your tips and report them to your employer if they total more than $20 a month. You'll also need to report all your tips on your tax return. Understanding how different types of earnings are taxed is crucial for accurate tax filing. If you have any questions or complex situations, get a hold of me at any time here on LinkedIn or also at my email address, which I can always send to you directly. Thank you for attending today's webinar.